And in our top business story, Jebel Free Zone announced today that Jafza registered companies can now raise capital through the equity market to fund their growth by listing on NASDAQ Dubai. Jafza has created a new business framework enabling companies in the free zone to apply to directly list shares on the exchange. Jafza hosts more than 7,300 companies that are engaged in trade and manufacturing activities in diverse sectors, including electronics, chemicals and petroleum products, construction materials, automotive, machinery and equipment, among others. Companies can carry out an initial public offering or offer share listing on the exchange by listing as little as 25% of their shares, allowing owners to keep control of the business. They need a market capitalization of $10 million or more, allowing a wide range of businesses to utilize the exchange as a listing venue. Jebel Free Zone companies can apply for a primary or dual listing on NASDAQ Dubai. An application to list must be made to the Dubai Financial Services Authority, the regulator of the exchange. We are currently witnessing the Internet of Things, or IoT, which is causing an explosion of data and shifting the focus of businesses into digital models. That was the core of the discussions taking place at the second Gartner Symposium IT Expo. Over 500 IT leaders and chief information officers from around the world gathered at the three-day Gartner Symposium IT Expo in Dubai to discuss the challenges and trends affecting the global IT industry. During the conference, research analysts from Gartner stated that by 2020, over 30 billion things will be connected, causing an explosion of data, which is forcing companies to be more agile towards the change. Among the trends that were highlighted were the transformative forces of mobile, social, cloud and information that are reshaping how enterprises need to operate and providing opportunities for companies to develop new products and services, as digital is the new reality and not an option. According to Peter Sondergaard, Senior Vice President and Head of Global Research at Gartner, there is a growing emergence of Chief Digital Officers who will have to lead innovation for the enterprises in order for them to thrive and survive in the digital world.
The Internet of Things globally will result in an economic value add to the global economy of $1.9 trillion. That is obviously far beyond what is spent necessarily on technology, because it enables new services, it enables companies to produce new products. The smart city activities is really one of the greatest examples of digitalization. It is that we connect up objects, whether it's cars or buildings, and we allow for better services for the citizens to then come out of that. Sometimes organizations, whether it's public sector or private organizations, need somebody who's a change agent that can enable that. Now, that can be an existing leader in the organization, but what we see outside this region is often the establishment of a chief digital officer, or sometimes also a chief data officer, and that person is responsible as a change agent to enable the usage of technology.
On the sidelines of the event, the latest forecast by Gartner, the technology research firm, revealed that IT spending in the Middle East region is projected to reach $243 billion by 2018, representing 5.6% of worldwide IT expenditure. According to the head of global research, projects such as the Dubai Smart City initiatives will prove to be critical in the transformation process of the region. Describing information as the oil of the 21st century, Peter added that governments and enterprises of the region have to be more vigilant towards the challenges of digitalization.
We may need a different organizational structure in the IT organization, what we call a bimodal IT organization, where one part focuses on running the back office and the other part focuses really on the new technologies. And then we need, from both businesses and also from the public sector environment, a rapid expansion of skills. For example, skills in the data analysis area, because the digital enterprise of the future creates an enormous amount of information. Information is, in fact, the oil of the 21st century. And that information somebody needs to be able to turn into revenue, to turn into money. And if we don't have the people that can do that, we won't actually succeed.
U.A.E. has been ranked the top country in the Middle East and North Africa region and 16th internationally by the Global Enabling Trade Report 2014, a copy of which was handed over to permanent representative of the U.A.E. to the United Nations Office and other international organizations in Geneva, Obaid Salim Azabi, by the Secretary General of the World Economic Forum. According to the World Economic Forum report, UAE climbed 3 places from its overall ranking in 2012. The Enabling Trade Index, the core of the Global Enabling Trade Report, measures the factors, policies and services that facilitate the trade in goods across borders and to destination. It is made up of 4 sub-indexes: markets access, border administration, transport and communications infrastructure, and business environment. Each of these sub-indexes contains 2 to 3 pillars that assess different aspects of a country's trade environment. In the new report, UAE ranked first internationally in the transport and communications infrastructure and 13th internationally among 135 countries in terms of the business environment sub-index, and achieved advanced positions in the other sub-indexes. Last year, it was Al Reem. This year, it's Khalifa City. Propertyfinder.ae has released its first quarter 2014 real estate report, covering the latest trends in residential and office markets in Dubai and Abu Dhabi. Based on 300,000 for-sale properties and rentals listed on the website, the report compiles statistics and trends of the most searched communities such as Khalifa City, Al Reem and Al Reef by over 2 million visitors to the site. Tracking searches on propertyfinder.ae between January and March 2014, the report gives readers the inside scoop on homes, offices, prices and upcoming developments in the capital. According to Renan Bordeaux, Deputy CEO, with news of the Emirate awarding $346 billion to various sectors, 2014 is expected to continue to witness the 10 to 17% growth overall in 2013. Sharp rent rises across the border in Dubai and the relocation of residents to Abu Dhabi due to the Live Local law have narrowed the rental gap between the two Emirates, even as rents continue to rise in the capital. Real estate growth also coincides with the development of huge infrastructure projects such as Etihad Rail and the Midfield Terminal.